Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Thursday, the 2nd of July, 2020, and it's 6:10 in the evening. So as we take a look at the markets, first thing to understand, these aren't open tomorrow, so they're all closed. They reopen on Monday morning, so there's exposure because the futures markets are open until noon tomorrow. Foreign markets are open. July 4th is a national American holiday, so there's exposure from that. The news of the day, well, I think it was all about unemployment claims and the jobs data. The claims numbers aren't dropping. They climbed a little bit. And what we expect is to see them climb as so many states are now shutting in again, so we should see that number climb. But the jobs data came out great. We added a whopping, 4.9 million jobs. We've already added back a third to the economy. Now, there will be a point where keeping to add these jobs will not be easy unless we do find a solution in some manner to whatever that's going to be of stopping COVID from transmitting. You know, you go to a restaurant, a bar, you can't go into a bar, and it's very difficult, and I get it, wearing a mask and trying to drink. Yet everybody's huddled next to each other, and if you go to these younger bars, you see what I'm saying. I mean, we weren't all, we didn't grow old. We started off younger, and come on, we've all done that. Who hasn't? And the last thing I want to do is you go to a bar to be social. What you're going to do, just be a drinker? We had a word for that, drunk, when I grew up. Okay, so we look at these markets. We can see the currency markets down basically. We're looking at the stock indices, looking at the ETFs. They're all in the green because the market was in the green. Another record day in the NASDAQ, very, very strong action. And the one thing that has happened is we've been on the right side saying the markets you don't want to be short at this point are XLK, QQQ. Very dangerous to be short where the public keeps buying. Now, we made a new high for the move on XLK. I'm not surprised. We're still in this area where we're not getting far away from the old high, which was 102.94. We're right now at 105.27, so you can't say it's run away from it, but you can make the argument that it's been a good run for it. Breaks in the market, where do you think they're finding support? When I put on the 18-day average of closes, excuse me there, you keep coming to it, and what I keep saying here, and I'm a broken record, until this doesn't work anymore, you assume it's going to work, that 18-day average is offering the support. You haven't been able to get away from it on the downside, and each time you've come to it, you've ended up with higher highs since this COVID epidemic. I'll stay with what I know. I look at XLK, the tech sector, with the slow stochastics. You hit the upper Bollinger Band. I'm nervous. What number do you think I teach you to come out at? Well, it would be that number. Now, today's high missed it by 9 cents, so there's room for it to hit it on Monday. 106.22 is the number. You got to 106.31, but you're certainly knocking on the door of that resistance area while the market's in what? An overbought condition. Let's get over here to the SMH. SMH has higher lows, higher highs. Bullish. This again is a U.S. Semiconductor 25 index. Again, technology. Again, making and running towards highs. Not as strong as XLK, but certainly bullish. Higher lows, higher highs. I look for the pros to step out of the market to a big degree at 155.48. The first challenge of the upper Bollinger Band. You get up there, you hit these numbers, you tell me what typically goes on. First challenge does that. Does it have to keep doing it? Nothing has to, but the odds are that that's what's going to work in Bollinger Bands because 95% of the time, the algorithm's designed to keep the market trading within it. Doesn't mean you can't keep pushing the band higher, but you do it in stages. You rarely do it and just run. In the industrial sector, I've been looking for resistance at the 18-day average. You're getting it. The market is not bearish, though. You have a pattern of a lower low and a higher high. You got nothing. And the market's just running right through here. Look for these Bollinger Bands to come crashing in on the market and get very close to this point. Why? You're losing volatility. That's the reason for it, and you're at a key number there. In the energy sector, as long as you have an embedded reading, and that's when the two numbers that make up the slow stochastic are going sideways under 20, and you can see that Thursday, both under. Under on Wednesday. Under before that. Under before that. You getting the theme? As long as it stays under, I think the pros are selling moving averages, the ones right above the market looking for a bigger break. I say they will get out when you get over 20 on a closing basis, and until then, they'll look to see the Bollinger Band wherever it comes in, and you can see it's 34.94. QQQ, again, you know that it's all NASDAQ. It's the NASDAQ stocks that are on the run. Tesla became this week the most valuable, high capitalized automaker. Who would have thought that 4 years ago? But there you go. Amazon just doesn't stop, as you can see. I can go on and on. It's the FANG stocks. What are they doing? You're going to see YouTube just announced, as I think I'm correct on that, they're raising the price of their subscription service now. They're streaming, I think, by $15. That's not a small number. It's a big number. What happened? You're going to cut your cable and you're going to go to these more expensive streaming numbers? Yeah. That's what people seem to be doing. And because of the content that they have to get to keep people coming to them, the price gets more expensive. On the EFA, emerging markets, you got higher lows, higher highs. So the trend is up. And that happened today, folks. So that's the first time I'm saying the trend is up. Prior to that, you had the bias down, but now you got confirmation. So until you take out 60.44, I think the pros will be looking at the 61.46 number favorably. Resistance going to be, I think, up here at the 63, what is that, 33 level, right in that general zone. In GLD, the trend is still up. You have an embedded reading. That's the strongest indicator. You've got higher lows, higher highs. Lose that, and I think you go back to the 18-day average. Don't lose it, and 168.53 is in play, the upper Bollinger Band. In the gold miners, I am looking right now at what it's doing. If we take a look, both numbers today are over 80. They were over 80 yesterday and the day before, not the day before. You embedded today. So until the red gets back under 80, I'm going to look for the pros to start buying. It's the first time I'm telling you that on this break. They'll be out if they lose that. That's my opinion of it, and we'll see how high this market wants to move. I've made one thing to you all week long. I said if gold keeps going up, it's hard to want to be bearish to miners because what do they own? They own the minerals under the ground. In this case, the gold miners, the gold under the ground. That gold has more value whether they're producing it or not, and that seems to be what's going on. TLT. It's hard to be in a day like today trying to be a hero with all these jobs numbers. And what the market did, forget today's action. You had already broken the trend, went back to the 18-day average zone up until today, and you're still in that. In fact, you hit it today. You got as low as 162.24. You finished 163.59. That's the zone that the market's got support, but we're not trending. We have a higher high, lower low, and momentum is turned down. But the momentum, because you lost the embedded readings, already hit that number. That's all it had to do, in my take on things. In FXE, where's the battleground? If you don't see it, why are you watching this? 18-day average of closes. What's the trend? Well, the swing line's up, but not the bias. Bias, you haven't closed over the 18-day average. The two fight each other. You got a big fat nothing. You have an oversold market that has been correcting, and now it's no longer oversold. In order to get bullish, you need to close over that 18-day average period. So I look at it all. I try to figure out what you do, and I'll tell you. Every now and then I come up with something for the year, and this is one of those times. And it is my charting course. My charting course is going to be $199.95 next week. This week, for the next 3 days, $99.95. You can see what it's done. I teach via PowerPoint that I created. Then I teach how to plot the charts. Then I explain it all. You're going to run with what I do. We go on the same charts. I make sure the software has it. So you got the same data. You go step by step back with me. In the mornings, we bring you up to date each morning so you get to see what it's doing. And I reinforce what you're doing. 54 videos, about 6 hours of them. Access to the research if you haven't tried it before. And of course, our charting software with all these studies built in. I teach you how to adjust them, what you're doing, and how to make it look on your own charts. I think you'll find that it's an easy thing to learn. There's 5 technical studies. You can handle it. You can handle the price. It's $99.95, and we don't make that you buy it and you have to start it that day. You can buy it. You want to start it in 3 weeks, that's up to you. Just let us know when it is. There's a time frame on it. It's 30 days. You won't need that time frame. You'll be through the course in about 2 weeks, giving it no more than an hour a day. Sometimes people get in, they start it, they can't stop. I hear the comments. It's just each chapter builds on each other, and they start seeing how it's working on it. I take off the name of charts from time to time. I don't want you to get caught up in the name of the chart, because now you think you're a fundamental trader. Trade the patterns. IraEpstein.com, under the word education. Go there, you sign up, you don't need a discount code or anything, and remember what I said, $199.95 next week. I'm Ira, you have a great day.